Debanking hit the news last year when Nigel Farage revealed that Coutts, the private bank, had closed his account. Farage's case was merely the tip of the iceberg. Hundreds of thousands of innocent people and businesses are losing their bank accounts due to overzealous regulation. Bank account closures are now 7 times higher than they were in 2017, when new anti-money laundering rules were introduced. In 2022, banks closed 343,000 accounts. In about half of those cases, the reason was that banks couldn't be sure that their customers were not involved in money laundering. In the same year, however, fewer than 2,000 people were actually convicted of money laundering. These stringent regulations mean that banks must conduct extensive checks on their customers. It's called Know Your Customer. And if they fail to do so adequately, in the opinion of the Financial Conduct Authority, the fines can be astronomical, running into the billions of pounds. Complying with these rules costs banks £34 billion annually. That's double the total budget for policing across the whole of the UK. Despite these heavy costs, there is little evidence that anti-money laundering regulations have reduced crime. For instance, the illegal drug trade, which is the largest source of money laundering, has increased by 60% since global AML regulations began in 1990. While politicised debanking cases like Farage's, he was debanked because the management of Coutts didn't like his political opinions, while these cases are rare, the UK's increasingly stringent anti-money laundering regulations are forcing banks to close accounts en masse. Banks are shutting accounts to avoid fines, even if it means harming innocent customers. To learn more about the causes of Britain's debanking epidemic and what we can do to tackle it, check out the Institute of Economic Affairs' latest publication, Debanked: The Economic and Social Consequences of Anti-Money Laundering Regulation, by visiting iea.org.uk.